In the final months of 2025, a silent alarm began to ring in the highest echelons of global finance, but almost no one in the West heard it. While everyday investors were watching stock tickers, China's wealthiest billionaires were orchestrating a secret exodus. They quietly pulled an unprecedented $47 billion out of the US stock market. This wasn't a simple portfolio adjustment. This money didn't flow back into Chinese markets, nor did it find a home in Europe, real estate, or even crypto. Instead, every single dollar was funneled into one of the world's oldest and most trusted assets, physical gold. $47 billion worth of solid metal, now sitting in secure vaults scattered across Hong Kong, Singapore, and Switzerland, far from American shores. You might think this is just rich people being rich, moving money around for tax purposes or diversification. But what if I told you this exact pattern, this same flight to safety by the same group of hyper-informed investors, was the canary in the coal mine for the last great financial collapse? The last time we saw a move of this magnitude, the S&P 500 plummeted 57%. Legendary banks like Lehman Brothers and Bear Stearns evaporated overnight, and ordinary Americans saw $8 trillion of their wealth simply vanish. It all started with the same quiet signal. China, elite, abandoning American assets for the safety of gold, just as they are doing right now. This isn't a conspiracy theory. This is a documented trail of money, and it leads to a terrifying conclusion about what's coming next for every single person with a 401k or a retirement account. The numbers themselves tell a chilling story. In the third quarter of 2025 alone, Chinese nationals sold a net $47.2 billion in US equities. This wasn't a slow trickle, it was a tidal wave of selling, the largest quarterly sell-off by this group since records began. But the truly stunning part is where that money landed. The World Gold Council's latest report shows an almost perfect match. Individual Chinese investors snapped up over $28 billion in gold bars and coins. Institutional buyers and family offices accounted for the rest, moving nearly $19 billion into gold-backed funds and private vaults. The math is undeniable. $47 billion sold from American stocks, $47 billion bought in gold. This isn't a coincidence. It's a coordinated escape. We're not talking about small-time investors buying a few coins. We're talking about the titans of Chinese industry. Pony Ma of Tencent slashed his US holdings and poured $2 billion into gold. Jack Ma of Alibaba liquidated his remaining positions in Amazon and Meta, converting nearly $1 billion into the precious metal. These aren't panicked traders. They are among the most calculated and connected investors on the planet. Individuals who have access to information pipelines that the average person can only dream of. And right now, they are sprinting, not walking, away from American markets and into the one asset that has weathered every economic storm in human history. The sheer scale of this reversal is staggering. Just 12 months ago, these same investors were net buyers, adding $23 billion to their US portfolios. That's a $70 billion swing in sentiment in a single year. For 40 years, the flow of capital from China to America has been a one-way street, but that street has now become an escape route. This isn't the first time they've known something before the rest of us. To understand what's happening now, we have to rewind the clock to 2007. The US housing market was at a euphoric peak. The S&P 500 was hitting all-time highs. Wall Street was celebrating its own genius, packaging toxic subprime mortgages into supposedly rock-solid investments. On the surface, everything looked perfect. But beneath the surface, a quiet exit was already underway. Treasury Department data revealed that Chinese investors had started selling. They offloaded over $30 billion in US equities between late 2006 and mid-2007. At the time, the financial media in the West barely batted an eye. It was dismissed as routine, insignificant. But the timeline that followed was apocalyptic. The Chinese selling peaked in the second quarter of 2007. By June, Bear Stearns' hedge funds imploded. By August, credit markets froze solid. In March of 2008, Bear Stearns was gone, sold for pennies on the dollar. By September, Lehman Brothers filed for the largest bankruptcy in history, and the global financial system was on the brink of total collapse. From the moment the smart money in China started selling to the market's brutal bottom, it took less than 2.5 years. They saw the end coming a full 18 months before the crash made headlines. And now, the same deafening signal is flashing again, only this time the numbers are even bigger. The question that nobody on Wall Street wants to answer is, how do they do it? How did they know to get out in 2007? And what are they seeing now that everyone else is missing? The answer is a terrifying information advantage. They operate with a clarity that Western investors, who rely on quarterly reports and manicured press releases, simply do not have. First, they have real-time manufacturing intelligence. China is the world's factory. When giants like Amazon, Walmart, or Target begin to secretly cut back on Christmas orders, Chinese factory owners know it instantly, a full 6 months before that weakness ever shows up in official US retail sales data. They don't read about a slowdown. They live it. That information flows directly to the billionaire class who owns those factories. In 2007, they saw the American consumer was tapped out long before Wall Street did. Today, they are seeing it again, but in a new sector, the AI gold rush. They make the servers, the chips, the cooling systems. And they are getting the first-hand intelligence that the monumental spending on AI infrastructure is beginning to slow down. Cancellations are coming in from the biggest names in tech. While American investors are still buying the AI hype, Chinese billionaires are selling because they know the revenue story is about to hit a wall. Their second advantage comes from their deep-seated banking relationships and government intelligence. In 2007, Chinese banks were on the other side of the trades involving America's toxic mortgage-backed securities. They saw the rot in the system from the inside and knew that AAA ratings were a complete fraud. They warned their wealthiest clients to get out while American pension funds were still buying the DMN stuff. Today, that intelligence network is even more sophisticated. The Chinese government operates one of the most advanced data gathering operations on Earth. They monitor everything from global capital flows and shipping manifests to credit card transaction data. They're not guessing about the health of the US economy. They're looking at a real-time dashboard. And the dashboard is flashing red. They see the US national debt spiraling out of control, now past $35 trillion. They've studied the collapse of every great debt bubble in history, from Japan in the 90s to Greece in the 2010s, and they recognize the exact same terminal trajectory in the United States. When you combine their on-the-ground manufacturing data with their top-down intelligence, the move to sell isn't a prediction, it's a reaction. They aren't just selling because of a bad quarter or a dip in the charts. They are liquidating their positions because they see profound systemic risks that threaten to incinerate the value of all dollar-denominated assets. And there's one more fear, a darker, more modern threat that is accelerating this exodus. There's an uncomfortable truth that has emerged in this new era of geopolitical conflict. The United States has shown its willingness to use the financial system as a weapon. Since 2022, Washington has frozen hundreds of billions of dollars in Russian assets, threatened their outright confiscation, and has taken aim at Chinese-owned companies and investments. For a Chinese billionaire with billions tied up in US stocks and real estate, this is an existential threat. They are watching these events unfold and drawing a simple, logical conclusion. If it can happen to a Russian oligarch, it can happen to them. Their wealth could be frozen or seized with the stroke of a pen. So what do? You move your fortune out of the reach of any single government. You convert it into the one asset that is truly stateless, that can't be digitally erased or sanctioned away, physical gold held in neutral territory. This isn't just about protecting themselves from a market crash. It's about protecting themselves from confiscation. At the same time, they are watching the US dollar slowly lose its grip as the world's reserve currency. The BRICS nations, led by China itself, are actively creating alternatives for international trade. For the architects of this new system, holding onto a massive portfolio of US assets is a direct contradiction. They are front-running the very change they are helping to create, moving into gold before the rest of the world wakes up to the fact that the dollar's uncontested reign is coming to an end. This mass migration isn't happening by accident. It is a calculated move into the ultimate safe haven, an asset with 3 unique properties that make it essential in a crisis. First, gold has no counterparty risk. When you own a stock, you are depending on a CEO, a board of directors, the health of the economy, and the stability of the entire market. It's a chain of dependencies that can break at any point. But when you hold a gold bar, you depend on nothing and no one. It has held its value for 5,000 years. No government can print more of it into oblivion, and no market crash can wipe its value from a screen. Second, it has universal acceptance. Gold is money everywhere on earth. The gold a Chinese billionaire stores in a Singapore vault is just as valuable and liquid as gold in London or Zurich. It is portable wealth that transcends borders and politics. And third, it is the ultimate hedge against the very currency debasement that China's elite see coming. They look at America's $35 trillion debt and understand that the only way out is for the government to print more money, effectively devaluing every dollar in existence. Gold is the only asset proven to preserve purchasing power through every major currency collapse in history. Its performance during the last 2 major crashes is a testament to its power. During the 2008 financial crisis, while the S&P 500 was cut in half, gold more than doubled in the aftermath. In the 2020 crash, stocks plunged 35% in a matter of weeks, while gold actually went up. It doesn't just protect your wealth, it grows it while everything else is burning down. What most people fail to understand is that a market collapse doesn't happen overnight. It unfolds in 3 distinct waves, and the vast majority of people only react during the final, most painful stage. We are currently in wave 1, the era of the smart money. This is happening right now and will likely continue into early 2026. This is where billionaires, family offices, and sovereign wealth funds quietly begin to sell their holdings.